I'm going backwards again. Hey everyone! Can you see it? Okay, I know there's some lights in here, but little reflection. Well, welcome to Talk About It Tuesday. We are talking about home mortgages today. The scary thought of buying a home and the first part of the whole process, which is getting a mortgage, can be really confusing. So thankfully, I have Greg Miller here, who is with Ruoff Home Mortgage, and he's a licensed mortgage lender in the whole state of Florida. Are you in Indiana too still?
Yes.
And Indiana, if you're from Indiana. I am Carolyn Spronley with Keller Williams on the Water, Sarasota, residential real estate company. And so, again, as a realtor, my job is to guide someone who is looking to buy a home. And the first step in the process is to speak with a mortgage lender. There are a lot of things that go into this and the reasons why, and we'll get down to that a little bit more at the end, but it's very important. So, you know, there are people out there that say anyone can get a home loan, anyone can get a mortgage. And so, Greg, is that true? Can anyone get a home mortgage?
Unfortunately, no.
Oh.
We would like for everyone to get a mortgage, but they cannot.
Yeah.
And that's where it's my job to educate them and do the homework and see what they can qualify, if they can qualify, and what they can qualify for.
So when you say qualify, I'm going to move this just a little bit here because we're a little out. Okay, we're back. So when you say qualify, what is it that you're looking for when someone comes to you and they say, okay, I want to get a home loan? What are the few things that you need from them?
Well, there's three criteria that we analyze. First, we analyze somebody's credit.
Okay.
For how they've paid their bills in the past.
Okay.
And if
we all love that credit score.
We love the credit score. And hopefully if they've had some credit in the past, then they will have what is referred to as a FICO score. Okay? And that's the universal term that everybody uses for mortgages for credit. Then also there is assets, which people are going to need money. So whether it's down payment.
Unfortunately, we need some money.
Yes. Whether it's down payment or funds to close for the closing costs and things like that.
Right, because there's a difference. There's a down payment to get this loan, right? And then there's also the cost of actually buying a house, which is completely different. Depending on the price of the home, those numbers fluctuate and they change, and depending on the loan,
yes,
those numbers fluctuate a lot as well too. So
that is correct. Yeah.
Right. Credit score, assets, and then the last one.
And the last one is income. What we refer to in the industry as the ability to repay.
Okay.
And not all incomes are the same.
No, and we were just talking about this. Let's say I make $500,000 a year. However, I write off $400,000 of that. And so really I have $100,000 of income. And then my debt, my car loan, I own a boat, whatever, I pay rent, let's say that equals $50,000. So really, I mean, this is broad, okay? It goes way deeper than this, but that's really only $50,000 worth of usable
from a lender's point of view, yes.
Right, so that's what the actual amount of money that you're going to be able to use to repay. Okay, so just to clarify that a little bit.
Yes, and then there's also people that may work for somebody. There is commission income. There is service-related people with tip income, overtime pay, and things like that. And there are guidelines for all these, whether we can use them or not, which we want to, but that's where I come in by consulting to me. I can give somebody a heads up based on their time on the job or what have you, how much of this income that we can use.
Okay. So, I mean, again, huge reason right here just to talk to a lender first before your home buying process. I know it's super fun. Let's go online. Let's look at the home. Let's go call a realtor. Let's go. I know most of the colleagues that I work with, unless you are pre-approved or very highly pre-qualified, we're not going to go waste your time or ours to go show homes, because you never really know until you speak with someone and go through all of these different things. Because again, you could be making a $500,000, and this happened recently, made a lot of money, but he wrote off a lot of money as well. And so at the end of the day, what he thought he could afford, he could not. So anyway, I just touched on our next topic, which is pre-qualification versus pre-approval. So what's the difference there?
Well, first of all, pre-approved is preferred by both of us.
Yes, it is.
Because that means that somebody has met with a lender, they have provided information to have their credit analyzed.
Mm-hmm.
They've also provided documents for their assets, their available cash, and then also their income.
Mm-hmm.
And it's been analyzed and it's usable income, and so now we have done something called a debt to income ratio, and we can provide how much house you can afford,
Mm-hmm.
and we can attest to the fact that we've seen all of these documents when we provide a pre-approval letter.
Right, okay, so this is you're actually visualizing that they're making this amount of money from tax returns and things like that.
Yes, I attest to the fact that I've verified all this
Okay,
information.
so that's a pre-approval, and then a pre-qualification is semi that, but lack thereof, so.
Correct, kind of a mix, but partial. I usually talk to them on the phone, I will pull their credit, and maybe time restraints, somebody come from up north, they're down here for a weekend, which
Right.
happens a lot in
Hey,
Florida.
I decided I wanna buy a house.
Yeah, and I didn't bring my tax returns,
Yeah,
imagine that, on
exactly.
vacation,
Right,
right?
right.
So,
Jeez.
so you gotta talk to a lender, the seller is requiring something, so I can at least pull their credit, and based on a verbal conversation with them about how much money they have available
Mhm.
and the income that they make, then that's when I would only issue a pre-qualification.
So no lying that you make 500,000 and you really only make 100,000 to start, because that's just gonna waste everyone's.
Yes. But sometimes people don't know,
That's
especially
right.
the self-employed people.
Right, right.
And again, we go back to that phrase, you may make this amount of money, but from a lender's point of view, it's not always usable income.
Right, right, and taxes and tax returns really are able to show that. That's the helpful hint
Yes.
here for
Mhm.
that part. So we want the pre-approval.
Absolutely, it's preferred.
It's preferred. So why on your end is it more preferred?
Because first of all, I'm putting my name on this, and I take great pride in telling someone that if you're pre-approved, I'll get you done.
Mhm.
You know, I will get you in that home and I will get you a mortgage. But so many times when I get the pre-qualification, if they don't have the documentation,
Mhm.
if I don't see the pay stubs, somebody could have slipped their mind, they're paying child support.
Right.
A mirage,
Mhm.
a myriad of many things that could take place if somebody doesn't think to tell
Right,
the lender.
right.
And when I analyze their documents, I can see this stuff. So it's important to me and you to do our due diligence and be as prepared as we can, because we are going to tell that seller, we'll be to the closing and your house is sold.
Absolutely. I mean, from the real estate side of all of this, again, a lot of colleagues and I, smart colleagues of mine and we ask for our clients to be pre-qualified because we don't want to waste anyone's time, yours or ours. And, really it helps you because we go to a home, we're qualified, we know that you're approved for, $300,000. Okay, great, let's go look at homes that are in your price range. We're not
Right.
wasting time going looking at $400,000 homes because that's what you think you're qualified for and you're not.
Yeah.
So it's just, I'm not trying to be mean, it's just a waste of time for everyone that's involved. And so when we find that home in your price range that we already know that you are qualified for, we can go to the seller, and say, seller, here is our documentation, our pre-approval letter from Greg Miller with Ruoff Mortgage that states he has looked at my documentation and has pre-approved me for up to this amount of money. So it's almost like cash. We say in this industry that having a pre-approval is kind of like cash. You're going into it like that. Now, if you're up against a actual cash offer, and they can close in 2 weeks, we still need a little bit more time for a loan, so it does change some things, but that's okay. And really, having that pre-approval already done helps us close faster.
It absolutely does.
Because we already have a lot of that documentation in. So it's very, very helpful. So
Very helpful.
biggest point here on our 5th episode of Talk About It Tuesday is that you need to speak with a mortgage lender if you're planning on buying a home.
Absolutely.
And if you have a realtor in mind, fantastic. If you wanted to take that step first, great. I would hope that your realtor would say, first step, speak with mortgage lender, because we need to know what you're qualified for. Tons of things go into it. It's not a very comfortable process. It's not. It's not. I mean, you're looking into their financial history. You know, there are a lot of hands in the pot looking at what you've been doing for a while with your money, and it's scary, and I get that, but it is so necessary. And owning a home is so positive and a fantastic investment for the future. And so that's definitely step one. So if you have any questions, please call myself, Carolyn Spronley, or Greg Miller with Ruoff Home Mortgage. Our information is above us in the comment or the description area, and then we also have it behind us if you were able to see that. I learned how to switch the camera around, so kudos to me. But thanks again for watching, everyone. Talk About It Tuesday, and we will talk to you next Tuesday. Thanks so much. Have a great day.
Thanks again.